YouTube channel, The Trading Line. So in this video, we are going to discuss the trade which I have taken in Bank Nifty and Nifty. So in Nifty, I've taken for this week expiry, so it is going to expire by this week. And for Bank Nifty, I have taken some monthly portions. So uh, for the starting of this month itself, I have taken some monthly portions. So that's called ratio spread, and I have squared it off once it reached some certain amount of profits. So again, I re-entered to some of the questions. So I have done something different than this. So here I have done two trades, two strategies, let's say. So for the first thing, so these three portions are, called ratio spread, as we already discussed in one of our video. And this is just, beer call spread. Okay, just for some margin benefits, and I have some leftover margin. So instead of keeping that ideal, I would like to do this so that I'll be getting some profit out of it. So that's why I've done two strategies. So the combination here in Bank Nifty, and in Nifty I have done some strangles. So that's iron counter actually, but I won't consider that as iron counter. It's because just for the margin benefits, I bought out of the money a call and put option. So you can see it's just trading around 6 rupees, and this one is around 3 rupees. So that's it. So it's ultimately the strangle which I'm trying to manage the positions for the next week expiry in Nifty. Okay, so I think so as of now this position is trading around 9k loss. It's because in Bank Nifty, first when I implemented the strategy, I sold 43,200 call option for some amount, and due to time decay, I saw around 2 to 3% profit in that amount itself. So now it is in 10% loss, right? So like that, I've seen some 2 to 3% profit over there, and I thought of 33 43,000 will be the good resistance for the Bank Nifty in the upcoming weeks. So that's why I thought of square of 43,200, and I just thought of going with the whole number. So after I squared off the positions, I entered here with 43,000. So in that one, we are sitting with 4k loss. So that's why it is showing around 9k loss. But we have already booked some profit in that. Okay, so I think this will be a little bit confusing, so that I will show that to you in Sensible with the payoff graph. So how it is going to work in case if something is going to happen to this position, in case my view is going to go wrong, then what are the adjustments I will do? So those things we will discuss. So if you see, so this is my Bank Nifty position. So in Bank Nifty, this is how the payoff chart will look like. So from this first, from the current market price, if the market is going to move 100 points higher, I'll be safe. If 100 points down, I'll be safe. So in case of the market is going to expire between these two, from 42,000, 43,000, I'm going to make a lot of money. And in 43,000, I'll be making my maximum profit of around 51,000. But I think that's not going to happen because it is not going to exactly expire 43,000. So however, if you see here in this range, I'm going to make a good profit. So that's how the market will work. And moreover, the SGS Nifty is showing flat opening on Monday as per the data we have on Saturday. So I'm not sure how the opening is going to be on the Monday. So that's not up to us. So even let's say if the market is going to gap up or gap down, so how it is going to change how it is going to affect our profit and loss. So those things I'm going to explain to you by using the sensible features. So let's say so now the position is around 9k loss, right? So in case on Monday, if the market is going to gap up around 200 points, let's say it is going to open around 42,500 maybe. So in that case, our loss will reduce to 2,000. So that is around by this time, 12:33. Maybe I will change the time to maybe 9:30. So at 9:30, in case if the market is open and it's trading around 42,500, at that time our loss will reduce to 2,500 cents. Okay, so this is all about Monday. So this is happening due to the premium decay on the weekends. Okay, so this is all about. So in case if the market is started to go move higher, what I will do is I will move this put option a little bit higher. So I will move this to 41,600 too. 41,800. So that's the thing I will do, and after that I will just leave it to the market. So in case huge rally is going to happen in Bank Nifty on Monday itself, then what I will do is I will book my profit in 42,200 call option, and I will convert for I will book my profit in 41,600 put option, and I will convert this as a strategy. So what I will do, I will sell 43,000 put option 8 loss, so that it will become a straddle. So and after I converting that to straddle, in case after that also the market is going to trend, then based on that I will do some straddle adjustments. Okay, so as of now my view is the market is going to stay between these two ranges, and in case if that kind of rally is going to happen in the upside, then we will do these kind of adjustments. Okay, so in case let's say if the market is going to open somewhere down, let's say if it is going to open 42,100, then I hope we don't need to do any adjustments, because that itself will reduce your risk potential, because we have implemented call ratio spread, right? So in case if it's going to open at 42,100 kind of things, then on that day itself your loss is going to reduce to around 400 rupees. So that itself a good amount of reduction in premium, and so you don't need to do any adjustments in this kind of scenario. You just leave it to the markets, so the time decay will take the role. Okay, so this is all about Bank Nifty positions. So this is for the monthly expiry. So I won't do much adjustments when it is involved with monthly expiry. Let's see about the Nifty positions, which is involved with weekly expiry. So I have already set this to the level. So in case if the market is going to open flat, and we will change the time to 9:30. So on Monday, on the opening itself, we are going to make around 90K. So that works out to be 3.5% of the profit for the margin which we deployed. So maybe on the opening itself, I will close all my positions in Nifty, because that's a good profit. So 3.5% within 2 days. So to do DK is a good profit. Okay, in case if some gap up and gap down is going to happen, then based on that we will have some little bit profit, like maybe it will vary from 10,000 to 12,000. So but still that's a good profit. So in case if I'm going to get 2% return on that day opening itself, maybe I will consider closing my positions, else based on the market movement. So in case if I am not seeing any kind of huge move or volatile move, I will just leave it to the market, so that maybe by end of that day we consider closing my position. Let's say in case up to 3 o'clock it is going to stay between some of these ranges, then I might be say, sitting with some extra profits around 4%. There's a possibility that I can make 4% on that day itself. Okay, so in case of that's kind of return I'm expecting, maybe I will leave it to the market. Okay, once I reach a certain amount of profit, I will close the position, and I will re-enter with some other strategy for the next 3 days, because next 3 days we will be having some decay, right? Good decay will happen in the weekly expiry. So based on that I will re-enter. Okay, so these are the things. So in case let's say if the market is going to gap up, then what I will do, I will square off this put option, and I will move it little bit forward until the market is going to reach this 81,100. So in case the market is going to reach 81,000 18,100, then what I will do, I will again convert this as a straddle. So once the straddle conversion is done, then based on that we will do some other adjustments. So whenever the other thing is very important, so that's your margin management. Okay, so how you are going to manage your margin and money there, so that's very important. So whenever you are doing some strategy, make sure that you have some of your capital left out for the adjustments. Then only you can able to carry forward your overnight positions. Okay, in case if something is going to wrong, let's say so whatever the amount you deployed for this particular strategy, the same much amount should be available with you to do the adjustments. Okay, in case a huge gap down or a gap up is going to happen, at that time the VIX will get increased, and due to that, even if you do some adjustments, you won't end up making profit. So at that time, if you have a good capital to do the same strategy again, so you can do it again with the strike price where it is trading now. Let's say if the market is going to gap up 200 points tomorrow, then what I will do, I will try to manage this portion. So I will try to convert this to straddle. So once I convert it to straddle, then I will do some more adjustments and I will implement maybe another straddle in the same strike price, in the other strike price where the market is trading, or else I'll be doing some averaging techniques to minimize my loss, or came out of the trade with good profits. Okay, so that is how the option selling will work. In case of some gap down or gap up is going to happen, that is how we have to manage. So that's why we always insist people to keep some buffer amount for the adjustments, but it doesn't mean that you have to keep it always. Okay, let's say you can do some intraday strategies by using those leftover margin, or else you can do some monthly options. Let's say you are going to take some code trade for a monthly options, and if you have a rest out capital or margin that you can use to do some adjustments trade in the weekly options. Okay, so that is how you can maximize your profit. And I hope this video will be very useful to you guys. So thanks for watching. So subscribe and share to your friends. Thank you.